Not much price change on Wall Street as we go into the Tuesday trading session. Huge rally yesterday, a mixed picture this morning. David Nicholas with us this morning. Okay, we've got a modest rally on Wall Street, big rally yesterday. What's going on here? Because the war is progressing. Explain this modest rally.
Yeah, Stuart, you're right. I mean, there are headwinds and headlines everywhere for this market, but the technicals are clear. So if you just look at last week, you had the RSI at 28, you had Bollinger Bands at their daily bottoms. We had some of the most oversold conditions that we've had for the market in a year. So we were due for a technical bounce, and we got that yesterday on Monday. And this is Fed week. If you look at the history of this, the markets have been pretty calm going into the Fed meeting, only to generally sell off after Jerome Powell starts speaking, starts opening his mouth. But we'll see. I think interest rates have done a lot of the work for the Fed, but I think this is a technical bounce that we're seeing, and it depends on what the Fed says this week. That's all that we saw for Monday. That's right.
That's all it is. It's just a technical bounce.
In the short term.
That's it.
It is, yes.
Okay, give me the long term.
That's right. Again, a lot of this has to do with interest rates. Where are interest rates heading? I've been in the camp that rates are probably going to be stubborn, if not head higher, even in the short term. So that does not bode well for equities. You also have the comparison trade, right? If I can get 5% in treasuries, equities really have to prove themselves. And with this earnings season, we've seen a very underwhelming earnings season, which I think should continue over the next couple of quarters.
How about Apple?
Yeah, if you look at Apple, if I'm buying Apple today, I'm paying 30 times earnings for Apple. But why am I buying it? Wait, there's a 50% premium to the S&P. I'm buying Apple for safety, not for large growth. I mean, they're growing their revenues about 8%. It's been pretty predictable over the last 10 years. But when you compare it to companies like NVIDIA or Google, they've been growing revenues by 20% over the last 5 and even 10 years. So we're paying a premium for Apple. And my concern is if Apple can't produce on iPad sales, we're seeing slowing MacBook sales. We've got a strong dollar that's headwinds for Apple. I think investors could take a hit. We could see a very good buying opportunity in the 150 range for Apple, and that's where I'd like to pick it up.
We'll have to wait for that. All right. Thanks so much indeed, David. We'll see you again later.